Hello traders, the title of the video is the power of the stochastic pattern, the power of the slow stochastic pattern. There are 13 specific stochastic pattern. In this video, I'm going to share with you one specific stochastic pattern. Pay attention, okay? On this daily chart of the dollar-yen, the slow stochastic trader who are using the 24 SP trading material, 24 SP trading material, okay, you will notice a stochastic pattern on this daily chart for the dollar-yen, okay. We see that the slow stochastic went to the oversold zone, display a low, there is a low, all right, followed by a higher low, all right, and now the stochastic went to the overbought zone. This is what we call, okay, this is a typical, a bearish, slow stochastic pattern. As the stochastic reaches the overbought zone, we will be looking for opportunity to sell here. A low followed by a higher low, all right, and the stochastic went to the overbought zone. This is a bearish stochastic pattern. There are 13 specific stochastic patterns. All right. So this is a bearish setup. So the mistake that a lot of traders are making is that a trading setup is not, okay, a trading signal is not the entry point. All right. So the trading setup is a bearish trading setup, is giving us, okay, a bearish warning. All right, a bearish warning. So when we have a bullish setup, we have a bullish warning. There is, if you have a bearish setup, there is a high probability. We are talking all the time about probability, not certainty. So when we have a bearish setup, there is a high chance, a high probability that the price may go down. If we have a bullish setup, there is a high chance that the price will go up. But something else we use also that we call the trading drill. Now, when we are talking about the trading drill, we are looking for the setup, then we wait for the signal, and then we select a low-risk entry point. So we are talking about the risk-reward ratio. So if the risk is too high, okay, we may stay out, all right, depending on our risk tolerance and also depending on our trading style, all right. So I want to go through it. So I want to use the trading drill, the setup, the signal, and the low-risk entry point, and also I want to use a specific slow stochastic pattern. In this case, the stochastic 833 has displayed a low followed by a higher low. Now the stochastic reaches overbought zone. All right. Recently, on this day here, right here, okay, we are on the daily chart where I place my vertical line on this day, on the 29th of July 2014. I tweeted, if you go to, okay, George Trio, this is my Twitter account, okay, you will notice that on the 29th of July, I give a warning to traders that the crazy currency pair has exhibited a bearish, okay, a slow stochastic pattern on the daily chart. This is the tweet that I posted at George Trio on the 29th of July 2014, saying to traders that the crazy currency pair has exhibited a slow stochastic pattern on the daily chart. Now, the dollar-yen, this is the currency pair that I call the crazy currency pair. Stay with me. So on this day, I will put on my bearish watch list the slow stochastic pattern. This is a bearish setup. One thing we can do, so on this day, I will, as this candle is closed, because I'm on the daily chart, I will wait for the candle to close fast. So As soon as the candle is closed, I will draw my horizontal line, which is the warning line. So if I want to sell, I will give priority to sell signal below, okay, the high of the candlestick bar of the 29th of July 2014. So I will draw my warning line. This is my warning line here. But we notice that the following day, all right, we have the ADP non-farm data, which was bullish for the dollar. So the dollar went up. So there was no signal to sell. All right. So we have a bearish setup, but we did not have a signal to sell. So we cannot sell. So remember, we want to use the trading drill all the time when we want to trade. This is the best way to use the 13 specific slow stochastic pattern. But another thing that we don't want to violate, that traders that are following us know, is what? The market pattern. So the next thing we want to check, what is the market pattern on the daily chart? So we have a bearish warning, all right? We want to use the trading drill. But the next thing we want to pay attention to, one thing we do not want to violate, okay, is the market pattern. If we are violating the market pattern, we are fighting, okay, literally fighting the market. We don't want to do that. We do not want to do that, okay? So we notice that the market pattern is horizontal market pattern. You see here, I draw my blue horizontal line here. This is the horizontal market pattern. So during the horizontal market pattern, we will prefer to sell, look for opportunity. We are looking for opportunity to sell on the upper end of the horizontal channel, yes or no? Though the warning was given here, we are on the median line of the blue channel. We will prefer the best place, talking about the risk-reward ratio or the low-risk entry point, we will prefer to sell on the edge of the upper channel because we do not want to violate the market pattern. So the warning was given here, but the best place to sell or the best place to look for opportunity to sell is here. All right. So now we see the following day, which is Wednesday, yesterday. All right. The price went up because of the bullish ADP no-farm data. Go to www.forexfactory.com. So you see, if we did sell straight away, we are just forcing the market. We don't want to force the market. We have a lot of traders that are using the 24SP trading material, a trading material that revealed to traders, day traders, swing traders, okay? The 13 specific slow stochastic pattern has given a warning, a bearish setup or a bearish warning. All right. Now we want to use the trading drill, wait for the signal. Here, there was no signal. And also we do not want to violate, okay, the market pattern. Here, the market pattern is what we call a balanced market pattern or the horizontal market pattern. There are three market patterns: the rising channel, the horizontal market pattern, and the declining market pattern. Remember, a setup is not a signal, it's not a low-risk entry point. So now the price pushes to the edge right here. So at this point in time, because we receive a bearish warning, we will be looking for what? A bearish signal. Okay? So if you want to sell, you can see that the price is going up here for all the way up here. We want to sell, all right, TSCW24 trader will look for a single red signal, or at least we want to see the price start displaying, okay, a lower high. Because if the price is going up, what we are paying attention to is a new higher high. If the price is going down, we are paying attention to a new lower low. If the price fails to display a new lower low in a downtrend, it's giving us the warning that the bearish momentum is diminishing. On the other hand, if the price fails to display a new higher high in an up move, this is also giving us a warning that the bullish momentum is diminishing. I have done my homework, so to avoid that the video is too long, I'm going to the 15-minute chart. On the 15-minute chart, what do we see here? We can see that as the price, you can see, was going up, In fact, I can combine this with Elliott wave trading, but I don't want to talk about Elliott wave in this video. I may record another video where I will highlight to traders tips and tricks about Elliott wave trading, talking about the same currency pair, okay, the dollar yen, which are called the crazy currency pair. So talking about the stochastic pattern, okay, we see a bearish setup, a very slow stochastic pattern, all right. So now on the 50-minute chart, we can see that the price was displaying higher lows, higher high. From here you see going up, display higher lows, higher high. Here we have on the 15-minute chart, the price has displayed this highest high. At this point in time, the price now pulled back, giving us another invitation to buy, but this time the price has failed on the 50-minute chart to display a new higher high. So this information is telling me that the price, okay, the bullish momentum is diminishing. What I'm going to do now, stay with me, I'm going to draw another warning line here for myself. I have sold, okay, the dollar yen at 102.80. Okay, so the price now 1 pip below my entry point. I will use for this trade 40 pips, 40. Now, the reason why I'm doing that is because of the personality or the characteristic of this currency pair, which is a bit difficult to trade because of a lot of automated trading systems that are trading this currency pair. A lot of computers are trading this pair. That's why I call it the crazy currency pair. So you have seen it now. So what I'm going to do now, to avoid that the video is too long, I will pause the video and I will come back to it to see, okay, whether I will get paid or not, whether there is a validation of my bearish setup. So my signal, in fact, is this okay, double top here. In fact, it's a kind of double top. The price has failed to display a new higher high, telling me that the bullish momentum is diminishing. Now I have sold it after, okay, you can see here, I draw a common central line here. This common central line now is kaput. I can sell like this, okay? This is it. Talking about the low risk entry point, let's go back again to the daily chart. We notice that the market pattern is what? Horizontal market pattern. The low risk entry point to look for opportunity to sell when we are in a horizontal market pattern, in a horizontal market or a balanced market is on the edge of the upper channel. So somewhere here is not a bad place if you are selling when we notice that the price is in the horizontal channel because the upper channel is somewhere here. So that's why I'm using 40 pips, okay, so that I'll have my stop loss a bit, okay, up somewhere here. All right, this is the power of, okay, the stochastic, the slow stochastic pattern. The slow stochastic on the daily chart has displayed a low from the oversold zone, all right, followed by a higher low. Now it reaches overbought zone. This is a bearish setup. But now we want to use the trading drill. The following day, if we sold it straight away, we will lose. All right, you don't want to sell it because of the bearish warning. We want to wait for the signal. Okay, there was no signal. Now, talking about the low risk entry point, where is the best place to sell your horizontal market pattern? On the edge of the upper channel. The following day, so we do not want to use the technical analysis alone. We want to combine the technical analysis with the fundamental. Okay, so this week, this is the week that we call the first week of the month. Check our video at www.youtube.com/user/George Trio. Look for the George Trio channel. I have recorded a video that I call How to Day Trade the First Week of the Month. Now, what is the first week of the month? The first week of the month is the week within which we have the non-farm employment data. Go to www.forexfactory.com. You will check the week, okay, during which we have the non-farm employment change, which is usually due on the first Friday of the month. This is the first week of the month. So I don't want to go to Forex Factory now, all right? So check it, okay? So this is the first week of the month because this is the week where we have, okay, the non-farm employment change. So a lot of it's very difficult or can be very challenging or very tricky for day traders and swing traders to trade during the first week of the month. So as we are using the technical tool, we must pay attention to the economy news. So because of the ADP non-farm employment change, which is due the first Wednesday of the month, which is yesterday, because today is Thursday, the 31st of July 2014, end of the month of July, here it is. So yesterday was Wednesday, WE, today is Thursday, 31st, and the time in London is 15:44 p.m. in New York, 10:44, okay, a.m., all right? So we are recording this video in London, all right? So this is it. So by the way, so we know that this week is busy. So as I enter this trade now, once we enter the trade, we are satisfied, we follow the trading drill, we select a low-risk entry point. It's not the end of it. We must now manage the trade. So you do not have to have the same trading style like myself, all right? According to my trading style, because tomorrow, which is Friday, the 1st of August, we have, okay, 1st of August will be here. We will have, okay, the non-farm employment change, which is this is a high impact economy news. This is what I like to call the daddy economy news. If you are trading stock, you want to check the economy news, go to Google Finance, Yahoo Finance, Bloomberg, check the economy news relating to the financial instrument that you are trading. If you do not trade Forex, check the economy news at Forex Factory too, because this economy news will affect every other financial instrument. The market is global. All right? So now that I need to manage my trade, okay, I enter this trade now, so I need to manage it. My strategy is very simple. All right? I'm using 40 pip for this trade. I want to get also 40 pip out of this trade. You may say to me, John, it's a bit crazy. Yes, I know it's a bit crazy because this is the first week of the month. That's why I'm using a bigger stop loss. And also, I don't want to be too greedy. Ratio 1-to-1. So, as I said to you, you do not have to have the same trading style like myself. All right? So, I'm looking for 40 pip, 40 pip out of this trade. Okay? Once I get that, I'm out of it. But talking about managing the trade, if I do not get paid, okay, by tomorrow morning, all right, if I do not get paid by tomorrow morning, I will close the trade because I don't want to remain in the trade up to the time when the non-farm employment change data is being released. I don't want to stay in the trade. So if I don't get paid, so my intention is to remain in this trade, okay, up to tomorrow morning. If I get paid before that, that's great. But if I do not get paid before, okay, let's say by 10 a.m. tomorrow London time, I will close the trade because of the non-farm employment change. So what I've done now, I have recognized, okay, a specific slow stochastic pattern giving me a bearish warning, all right? Now, I need to wait for the signal and also select a low-risk entry point. At the same time, I do not have to violate the market pattern. This is the way we must use the 13 specific slow stochastic pattern. There are 13 specific Elliott wave pattern, and there are also 13 specific stochastic pattern. I need to say something very important here. A trading tool, okay, a trading tool is not, okay, the most important thing. But mastering the trading tool is the ultimate goal of having the trading tool. So you may go now and buy the TSCW24 or TSCW008 or the 24SP trading material, but the trading tool will not trade for you. You must now learn to master the tool. This tutorial is primarily for the 24SP traders, to explain to traders what they are going through. Very often you'll see that this pattern, when the stochastic will display a low followed by a higher low, and the stochastic will go to the overbought zone. Very often, ladies and gentlemen, you will see another candle, boom, up. Why do we have this tall candle? But I know why we have this volatile candle. This is because of the ADP non-farm data, okay? I know why, okay? But sometimes, the reason why we have this tall candle after the warning is fired, so to speak, is because aggressive traders will quickly jump into the trend and start selling, and they will be taken out. As they are taken out, the price will run up first. The opposite also will take place in a downtrend when the slow stochastic will display a high followed by a lower high, so the stochastic is overbought, and then will be followed by a lower high that is not in the overbought zone, and then the slow stochastic will finally reach the oversold zone. This is the opposite of this slow stochastic pattern. So far, I have revealed to the public two slow stochastic patterns, but I cannot reveal all the 13 specific slow stochastic patterns. If you want to know all the slow stochastic patterns, you need to purchase the 24SP trading material at www.stochastic-macd.com. All right? It makes sense? It is also powerful. So far, we are in this trend, and this is what we are doing, and this is how we want to use, okay, the 24SP trading material, a trading tool that reveals to day traders, swing traders, position traders, and investors 13 specific slow stochastic pattern. So this is a demonstration and also, okay, a tutorial to, okay, help traders that are using the 24SP trading material. You do not want to violate the market pattern. If you are doing that, you are fighting the market, okay? You want to sell at the best resistance level. Sometimes you can see here on the daily chart, the level where the warning was fired was a resistance level because of this point here, you see, it's a resistance on this level line here. But however, there is a better resistance above it, which is, okay, the edge of the upper channel. So you may see a resistance, but wait for the signal, follow the trading drill. The setup is the warning, wait for the signal, okay, and select a low risk entry point. If there is no signal, you don't want to enter the trade, okay? If you have the setup, you receive the signal, but the risk is too high, okay? If you decide to enter the trade because the risk is too high, which sometimes trader can do, you want to keep your eyes on it and manage it, okay? Control it. You know it's risky, you want to take it, but control it. Don't gamble it, don't force it, okay? I'm going to go back again to the 15-minute chart. So I have demonstrated here the power of a slow stochastic pattern. All right, the pattern is very simple. The slow stochastic is in oversold zone, display a low, and then it display a higher low that is not in the oversold zone, that is also not in overbought zone. Now the slow stochastic rises up to the overbought zone. This is a bearish setup. We will draw the warning line as I did here, and we will use the trading drill without violating, okay, the market pattern. We are talking about the market pattern on a setup time frame. So you can see here, we have seen the slow stochastic pattern on the daily chart. This is the power of the slow stochastic pattern. What I'm going to do now, because this is a live trading, can go on and on and on. No one knows how long before I get paid. I will pause the video and walk away from it, okay? And I'll come back to it and show you what is happening here. It may take hours, no one knows, so just leave it like this. So, going to pause the video, but before I pause the video, okay, I will draw my vertical line here to show you where I'm going to switch my time frame from the 50-minute chart. I will switch to the 3-minute chart and to zoom into the price, and I will leave my vertical line here at the point where we are pausing the video. And I will let it run and come back to it to wrap it up, okay? Even if I don't get paid straight away, all right? So I will manage the trade. Another thing I will say to you, though I'm using a 40 pip stop loss, if the price return back above this high here, so for instance, if I show you again on a 50-minute chart, if the price goes above this high, I may decide to bail out, to come out. There's no point to be a courageous trader. All right? So go back again to the 3-minute chart, and I will pause the video, and I will also show you the time when I'm pausing the video. The time now in London is 53 minutes past 3 p.m. In New York, 53 minutes past 10 p.m. All right? Okay? In exactly 1 hour, 6 minutes, London will be closed. So we will see. Okay? We will see. All right? So pausing the video for the first time. So I will speak to you very soon. We were recording this video. It's now 25 minutes. So we are pausing it for the first time. Thank you for watching, and I will speak to you very soon. Okay, traders, we paused the video here, but as you can see, London was closed here at this point in time, exactly here at 12 p.m. Eastern time, and that's 5 p.m. London time. And since then, this pair just went back a bit up, you see here. So it's not much going on here. So what, as I said to you, I will let it run until tomorrow morning and see whether I will get paid or not. The setup is in place, and I entered the trade on the edge. I'm happy with everything. So now I just need to let it run, okay, let it run. And what I will do, I will pause the video again, and we'll see tomorrow morning what is happening here. All right, so you can see here, it went down a bit, and then it's now going back up a bit. But our entry point, it was at 10280 using a 40 pip, so it went back up to 10290. It's now at 10282. So we are still in this trade, nothing to worry about. So I'm just going to leave it run and see what will happen tomorrow, because sometimes the price will take ages, but I'll give it a chance. Okay, I'm happy with my setup. I'm happy with my entry. So I'll leave it as it is, and we'll see what will happen okay, by tomorrow, or hopefully during the Asia session. But as you know, during the Asia session, it's usually very quiet market. It's pointless to hang around looking at the chart, okay? So I've done those things in the past. I don't do them anymore, so I just leave it there. Whatever happens, is happening, okay? So we'll see whether I will get paid in this trade after my beautiful, okay, stochastic setup, okay? So what I will do now, because I would left, we were on a 3-minute chart, okay? So because it will take it may take longer, okay, before we get paid, I'm going to switch my time frame to 15-minute chart. I will remove my old vertical. In fact, I'll move it to where we are now, and I will pause the video here. So remember, we are stopping on the 15-minute chart, okay, 15-minute chart, and I'll move the vertical line here. And you can see today is the 31st of July 2014, and so London is closed, New York also is closed, so I just let it run, okay? And so I will speak to you later, okay? Thank you for watching, and I will speak to you soon as I resume this recording. Okay, traders, let's continue with our recording because we posted this video yesterday, right here, okay? And since then, the price continued to go up, went all the way to 10300. That's 20 pips above our entry point. Our entry point was at 10280 using 40 pips. So we are still in this trend. As I explained to you, today is the no-farm employment change, making this trade a bit tricky for me. I may decide to close this trade now. Normally, I plan to close it this morning, but I'll let it run. So what I'm going to do, I will let it run, And 30 minutes before the non-farm employment change, I will reduce my stop loss down to 25 pips instead of 40 pips. So this is my plan for today. So I will wait until 30 minutes before the non-farm employment change is due, and then I will reduce my stop loss to 25 pips instead of 40 pips. So as you can see, it's a bit challenging trade, using the slow stochastic pattern. The first week of the month is the week when the non-farm employment change is released, and the first week can be very, very challenging for traders. But as you can see, I'm making my decision and I'm sticking to my plan, and this is what I'm going to do. So again, I'll move my vertical line right here on a 15-minute chart as I did before, and I will come back to it 30 minutes before the non-farm employment change, a very volatile, a high-impact economy news. So speak to you soon. Okay, traders, this is it. In exactly 3 minutes or 2 minutes now left for the non-farm employment change. So, as you can see here, the price went up to 10300, waiting for the non-farm employment change data. We'll see what's going to happen. I will leave my stop loss as it was before. I will not change it. So I'm in it with 40 pips. So we will see what's going to happen. Okay. So we pause the video here when I left my vertical line for the crazy currency pair, the dollar yen. So only a few minutes left, and we'll see whether I will get paid or not. Using now, my slow stochastic pattern on the daily chart. So now the price is at 10301. I need to remind traders that I entered the trade at 10280. All right. So I'm under pressure now. So my stop loss is at 10320. If you like, we can put it here. But because the news is due now, I want to stay on a 3-minute chart to watch what is likely to take place here. It's looking bullish here on a 3-minute chart. You see the price went above the previous high here, going around. So right now, it's looking bullish. Here it is coming up. We'll see. Remember, my stop loss at 10320. I do not want to close this trade. This is a big risk that I'm taking here. Here it is, come down big time. You see now? Beautiful, isn't it? So what I will do, because I don't want to open too many pages on my computer, so I will go to, I'll leave it as it is, going down nicely here. I want to check something on my computer. You can see here it went up to 10204. The news is out now. I will check the news on my Galaxy Note. So very interesting. Moment please, as I'm doing something here with my Galaxy Note. Great stuff, great stuff. Okay, 1 second please. I want to check, moment please. Going to check, I'm still here, though I'm checking the Forex Factory to see the data itself here. On my Galaxy Note, non-farm data, 8:30 a.m. Eastern Time. That's 1:30 p.m. London time at Forex Factory. If you trade stock of any other financial instrument, the first week of the month is bearish for the dollar. The forecast was 231,000 job creation, but the actual figure, which means the data that we have today, is below the forecast. So Expected job creation was 231,000, but the actual figure is 209. So 209,000 is below 231,000, which is below the expectation. So if you have a less job creation, okay, is bearish for the dollar, okay. Theoretically speaking, it's bearish for the dollar. That's why, okay, it came down big time. I want to check the Euro USD because I reduced my risk exposure earlier on in the Euro USD because I don't want to be too arrogant. Okay, the Euro went up big time. You see here? The opposite, PIM up, okay? So I came out of the Euro because I don't want to expose myself too much. The target that I set initially was that, yes, it went above the target, okay? I set my target at 13427, so it went up above my target. That's the, or you see, trade is coming out a bit here, all right? But for the dollar yen, okay, as you can see here, the power of the slow stochastic pattern. And honestly speaking, it wasn't a straightforward trade because of the non-farm employment change. Was a bit risky trade, as you can see, very risky trade. I took, was planning to reduce my stop loss. I did not because it's a volatile economy news. I decided to leave it as it was instead of reducing it. So, but the trade is successful, but I'm not closing this trade here because it's not much in this trade so far for me. So I will allow the price to go ups and down as the market will play it. Okay, and I will stay in this trade as you see. So it didn't go to my stop loss at 10320 up here. So I'm still in this trade. I'll let it run. Okay, because as I show you on the daily chart, okay, we have noticed a slow stochastic pattern, all right? We used the trading drill and we did not violate the market pattern. But the market environment was risky because, okay, of a high impact economy news, okay, that is due. But this is where the challenge is coming in because now it comes down to your trading style and what you want to do. So I see a setup, I see the signal, I see the low risk entry point, okay? I see the market pattern, but there are major economy news that can work against me. If it was bullish, I would have been taken out of this trade, all right? You see now? But the decision is always yours. Do you want to stay in the trade or do you want to close it? All right. Do you want to reduce your risk exposure? What do you want to do? This is the challenge that all market participants are facing, whether you are hedge fund, professional trader, day trader, swing trader, we are all in it. And individually, you will learn, okay, to manage the trade. As I was showing you now for the Euro USD, I could have let that trade open, but I close it, okay, 5 minutes before the news, because I don't want to let myself to open for all the blah, blah, blah. All right. I could have get paid for that beautifully, but I close it. Okay. I took only a few, 2 pip, okay, out of that trade. I could have earned more out of that, but I don't want to leave myself to open or be too arrogant or too courageous. I close it. Okay. I close it. That was my own decision. But the Euro, okay, let's go back. I was on the daily chart. This is the Euro USD. Go back again to the 3-minute chart to see what's happening here. Should go up more, okay? The Euro is bullish. The Euro GBP also is bullish, okay? But one must trade like a professional trader on the edge, okay? So it has been a long time since we started recording this video. It's under 40 minutes, which is great. So what I will do, I will wrap it up now. I just show you the step that we need to follow. Anytime we want to use a trading strategy, okay, we are looking first for a setup. A bullish setup is a bullish warning. A bearish setup is a bearish warning. Now, we must now wait for the signal, okay? We receive the signal, We want to access the risk-reward ratio. Is it worthy entry in this trade? And then we want to select a low-risk entry point. We do not want to violate the market pattern. We will always combine the technical and the fundamental. Now, once we enter the trade, we must manage the trade. All right, this is what I've done now in front of you to show you, okay, the challenge. That's why I say, first I was saying to reduce my stop loss. Then I changed my mind. I said, no, I leave it as you all because it will be volatile. Okay, why? Okay, it's open. So because I closed my Euro USD trade, I decided to leave now my dollar yen trade open and not change my stop loss. Okay, if I had my Euro USD trade still open, I would have reduced my stop loss for the dollar yen. Okay, and so on and so on. I hope you have learned something from this video also about the power of the slow stochastic pattern. Okay, and we put into use, okay, to make excellent day trading, swing trading, and investment decision. If you want to purchase the 24SP trading material, go to www.stochastic-macd.com, www.stochastic-macd.com. We appreciate your feedback. So if you like this video, give us the thumbs up. If you dislike it, please give us the thumbs down. Okay? Do not go away without giving us your feedback. Your comment also, we appreciate your comment. If you truly like it, share it on Google+, on Facebook, on Tumblr, and all on the social website. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. This video is about the 24SP trading material, a trading material that reveals to traders 13 specific slow stochastic patterns. Thank you.